we'll begin with question 1. Quickly, I think we'll stream through. ABC, one second. ABC Industries Limited of Mumbai imported one machine through vessel from Japan in the month of November 2020. The following particulars are made available. Serial number 1, cost up to port of exportation incurred by exporter is 6 lakh Japanese yen. Loading charges at the port of exportation is 25,000 Japanese yen, and freight charges from port of export to port of import in India, that is 1 lakh rupees Japanese yen. All right. So basically, a very clear, quick idea that we are the person is importing something, one machine, and there's certain costs which have been involved. One basic cost of that machine would be about 6 lakh Japanese yen. The loading charges which were incurred for bringing at the port of exportation. Please note over here that to Japan port, when they were getting whatever the loading charges were incurred by 25,000 Japanese yen, and freight charges from port of export to port of import in India, that is by air, by sea, whatever it is, okay, through vessel. So by sea, the total freight charges incurred was 1 lakh Japanese yen. Let us see what else is given. Following additional amounts paid by ABC Industries Limited. Designing charges necessary for such machine paid to consultancy firm in New Delhi is 8 lakh rupees. Okay. Then commission paid, which is not the buying commission, to local agent of exporter, 1,25,000. Actual landing charges paid at the place of importation is 15,000. Actual insurance charges paid at the place of importation are not yet ascertainable, and light rate charges paid at the port of importation is 20,000. Quick look at it, highlights whatever we can see here. One, designing charges, which is necessary for the machine, but it was paid to a firm in India, is 8 lakh rupees. Please note, firm in India. Okay. Commission paid, which is not the buying commission. It is not buying commission. We are paying 1,25,000 rupees. But it is again, it is also paid to local agent of the exporter. That means we are paying to an agent in Japan that commission amount, which is not definitely not the buying commission. Buying commission means it's all right for buying that, whatever commission we are paying it up, that we have to include. Anyway, actual landing charges paid at the place of importation 15,000, which is paid in India over here when the goods came. At that point of time, whenever we landing charges we paid was 15,000. Actual insurance charges paid to the place of importation is not ascertainable, and lighter rate charges paid at the port of importation, that is 20,000. Light rate charges basically, again, in some ways it's like loading, unloading and all, it is includable in that. Other information, rate of basic customs duty is 10%, rate of social welfare surcharge is 10%, integrated tax as per section 3(7) is 12%. We have to ignore GST compensation cess, and Japanese yen is equal to 0.71 rupees. Arrive at the total customs duty, including integrated tax payable under section 3(7) of Customs Tariff Act with appropriate working notes. Okay, so as usual, we'll try and we will go through the question again and understand what would the possible answer be. We know that we have to calculate the customs duty and the IGST which is payable. So where do we really begin? Tell me, somebody, can one of you pitch in?
Sir, we can start first from cost. First, we can drive the FOB value.
Exactly, precisely. So the first and foremost thing is going to be FOB. We have to calculate what is the FOB, so that the remaining calculation will follow. But remember, all in all, we have to find out the transaction value. On transaction value, as customs duty and IGST, etc., will be leviable. All right. So, like you rightly pointed, we'll start with FOB. Now, what is what is FOB full form is free on board. Now, what is generally referred to? What is the meaning of it?
Total cost till the time till the point of export.
Precisely. So till the goods are sent for export, they are ready for export, they are brought over there free on board. That means all the costs have been incurred, whatever has had to be incurred over there everything has been incurred, and then that is the entire value of FOB. Now the crux of FOB is that we do not include the transportation cost, the freight charges, the insurance, and loading unloading on the FOB value. At the port of importation, whatever is there, all that we do not include. So here we'll start first with FOB as to till the goods came to that port, Japan port, what all charges were incurred and what all should be included in FOB. We'll just have a look. All right. So to begin with, cost up to port of exportation incurred by exporter is 6 lakh rupees. Clear hint, I'll give it to you that this is definitely includable. So this is the entire cost of the machine which was incurred. So 6 lakh is part of our FOB. Then loading charges at the port of exportation, is it includable or not includable?
Need to include, sir.
We need to include the loading charges at the port of exportation at 25,000 rupees. All right. Then freight charges from port of export to port of import in India, is it includable in FOB or not?
Yeah, sir. Subject to 20%.
So subject to 20%, but again,
if actual freight is there, then we can take the actual number.
We have the actual freight, but at the same time,
CAF value.
Sorry,
We can take that in case we compute CAF value.
correct. We will be calculating the Indian value and all. I'm sorry. Yeah. What I'll do is we'll just bring it in an Excel form. All right. Particulars, Japanese yen and INR.
So we are not able to view the Excel.
You're not able to view my Excel?
Yeah, only the PPT we are able to view.
Okay. Anyway, so we will try, and again we'll try the top method only. So again, I am going to hold you on the freight charges. Next, what else was incurred? If there is anything from here is going to be includable?
Sir, commission paid to local
Commission.
agent because it's not a buying commission.
Correct. Okay. To a local agent of exporter, will that be included when it is paid out of India or within India?
Commission paid to local agent, exporter, local.
All right. We'll check it up. Yes, it is definitely includable. Commission paid to the local agent of importer. Apart from that, designing charges.
Designing charges are it will be included.
Okay. Okay. Let us just go through the solution with the provisions. I think that will give us a very good idea on what shall be there.
Yeah, and point number 5 is also need to include.
Point number 5, light rate charges paid.
Yeah.
Okay, you're missing somewhere. The entire thing is that we only for FOB we only have to include the expenses incurred up to the point of exportation.
Okay.
If you look here, light rate charges
Yes,
are paid
yes.
at the port of importation within India. Definitely
Yes.
not.
Yes, yes.
All right.
I agree.
I think I have to share my entire screen. That was, I'm sorry. Screen share. Yeah. Okay. So okay. So here we they already have it. I think you will be able to view my Excel now.
No, sir. We are not able to view.
I'm not now.
Yes. Now it's
Yeah. All right. So we'll just have a look at what all are the goods products which shall be includable or not. Cost up to port of exportation incurred by exporter 6 lakh rupees is definitely a part of our workings.
yes.
All right. Then when we are converting into INR, what is the value of INR given in the question?
71.
0.71.
Yes, 0.7.
Indian rupees. So 6 lakh into 0.71, that is 4,26,000. Then loading charges at the port of exportation, definitely includable, 25,000. All right, which INR value will come to 17,750. All right. Freight charges. The entire purpose of FOB is that you are getting the goods over there at the port of export. So when you are moving between from India, Japan to India, at that point of time, freight will not be part of FOB. The
Yes.
20% what you had told, that limit is for 20% of the FOB value is the maximum freight which can be allocated. Same way for insurance and loading charges also, there are certain amounts which is given in case they are not ascertainable. All right.
Yes.
So freight again will not be a part. Designing charges necessary for such machine. Any expense which are incurred for that machine, when it is paid like additional expense, when it is paid within the country, then at that point of time, it will not be included for the purpose of customs duty and all. All right. Hello.
Yes, sir.
Yeah, we are following.
Yes, yes, sir.
Yeah.
In
Okay.
this
Then
case, 8 lakh will be not need to include.
8 lakh definitely not included.
Okay.
So basically, direct if we see the goods, we made the goods, all right. Then we got the goods and we dropped it at the Japan port. Up to that, whatever cost was incurred, that has to be included. So our total is going to be here. Japanese yen 6 lakh 25, Indian rupees 4 lakh 43,750. All right. Hello.
Yes, yes, sir.
Yeah. Plus again, like I said here again, when we were discussing commission paid to local agent of the exporter. Again, this was not incurred in India. All right. It is not a buying commission, and it is again not the how do you say, we are paying it before the goods were sent and all of that. All right. So when we are paying it to a foreign agent, at that point of when we are not paying a buying commission, then that also shall be includable. But here the crux was that we do not know what is the Japanese yen. We are paid in INR only, and hence that shall be calculated at INR itself at 1,25,000. All right. Following?
Yes, sir.
Yes. So our total FOB value is going to be 5,68,750. All right.
Yes, sir.
You following?
Yes, boss.
Now, on 5,68,750, let us have a calculation of 20%, which is again going to be give what is the maximum freight we can calculate. Sorry. That is 1,13,750, but actual freight paid was how much?
1
1
lakh.
lakh Japanese yen. Again, let us not confuse between INR and Japanese yen. So that is again 71,000 in INR value. All right.
Yes, sir.
So we have calculated the FOB. Then we are seeing what is the freight charges to be included, and then we have to come to transaction value. Now, which of these will be included in transaction value? Designing charges paid to consultancy firm in New Delhi, will that be included?
No, sir.
Okay, understand the concept. How it happens is that goods are coming from the foreign country to Indian port. All right. Now, customs duty is payable on the value of that entire machine, how much it has cost to bring into India.
Yeah.
All right. And that is why everything, whatever we incurred outside, whatever we have to pay outside, that has to be added. I'll give you an example of imported cars. You have the Mini Cooper, right?
Yes, sir.
So Mini Cooper, when you are importing it, you don't import the entire car. You basically get up a structure, things like customizable things like airbags, like dashboard systems and all of that. That is actually assembled in India. Now, the entire reason behind this is whatever you are going to add there, that value shall be added for the purpose of customs duty.
Okay.
Understandable?
Yes, sir.
So when we the entire point is that customs to help a customer pay reasonable customs duty, pay less customs duty, they basically don't fit out everything what can be done in India. They only give out the basic structure. So that is the entire point. Now this designing charges is that like adding airbag to that machinery. So because it was paid to a local a person. So all of that will definitely not form part of the transaction value for calculating customs duty. So this is definitely 8 lakh. We can close our eyes and forget about it. Commission paid already included in FOB. Actual landing charges paid at the place of importation 15,000. So the goods came before clearing for customs. We had to incur it. Landing charges are being paid. So that amount that shall be included in the transactional value before crossing the customs frontiers, whatever we had to pay. Are we clear?
Yes.
So we are coming through FOB, which was up to the port of exportation. All right. Then the goods are coming, traveling and coming to India. And from there, we are calculating up to the customs gates how much of the cost was incurred, because that is going to be the transaction value to bring that product over here in the country. And on that customs duty shall be leviable. All right. So actual landing charges definitely will be includable in the transaction value. Okay. Before coming to insurance, I'll come to light rate charges. Light rate charges is in the nature of loading, unloading, and all of that, which was paid at the port of importation. Now we know specifically that 20,000 INR was included. In the rules, it is given that if it is not ascertainable, then we have certain criteria to figure out on what the value, how we can calculate on FOB. All right. But here, since we know it, 20,000 will be part of our light rate charges. Additionally, actual insurance charges which was paid to the place of importation is not ascertainable. Now, insurance charges, if it is not ascertainable, it is given in the rules that a specific percentage of FOB shall be added to the transaction value. What is the percentage?
1.125.
Precisely. So 1.125. Now understand why was FOB, see, ideally, because everything is going to be part of our transaction value. All right. But why was it important for us to calculate FOB nevertheless was for three factors. One, for the freight, what is the total, up to what percentage, up to 20% only is allowed. So we have to calculate to see that it is within the parameters. To calculate insurance, if it is not given, again, remember, for freight it is 20%. For insurance, if it is not ascertainable, only then we look at the 1.125%. Again, for loading, unloading charges, etc. as well. If it is not ascertainable, then we look at the percentages. But since it is given over here, 20,000 shall be taken in the transaction value. We'll have a quick look at the answer again. First up to we had a look till here, 4,43,750. Then add commission paid to local agent 1,25,000. FOB value of customs is 5,68,750. The total value 443 plus 125 in INR is 5,68,000. Add freight charges from Japan to India is 71,000 rupees. Light rate charges 20,000 and insurance charges at 1.125% of FOB is just 568,750. Total will come to 6398.43. The CIF value is 6,66,148.43. All right, is it understandable?
Yes, sir. Sir,
Yes.
point number design charges, I need to understand more about
I'll give you the brief with the when we'll look at the provisions as well.
Yes,
all right. So this is the basic structure of your answer. Now, one by one, loading charges. Why again? I just go at the important notes. These are basically your entire answer. The cost of transport, loading, unloading charges associated with delivery of imported goods up to the place of importation are included in the accessible value. Remember that whatever when we are calculating the transaction value as per custom rule 10.2 of customs evaluation, shall we have a look at what does that rule say? Is it, shall we? I'll take your mute as a yes. All right. Now, section rule 10 actually says, in determining the transaction value, there shall be added to the price actually paid or payable for imported goods the following to the extent they are incurred by the buyer. If the buyer is incurring, but not included in the price. If it was not included by that person who was export. Remember, FOB has two kind of FOBs are there: FOB origin and FOB destination. FOB origin means that up to getting that goods to Japanese port, till then it is the responsibility of the exporter. After that, the buyer will only bear any responsibility at all. FOB destination means that up to the goods have reached over here in India and all of that, until then the exporter, the Japanese guy, is going to take responsibility. So majority of the cases, this is FOB origin only, and here remaining things, that is transportation and insurance and etc., are being incurred by the importer. So it is given that as per this rule, in the transaction value, we shall include the following expenses which are incurred by the buyer, but was not included in the price. All right, which is commission and brokerage except buying commission. All right, buying commission is specifically excluded. Cost of containers which are treated as one for customs purposes. Then cost of packing. All right, then value apportioned as appropriate of the following goods or services on FOB value. I'll just sum it up quickly. Okay, which is materials, components, parts, etc., tools, dyes, and materials consumed for the production of imported goods. If it is already not included, then it has to be put. Next one. Again, Ravi, answering
Yes,
your
sir.
question over here. Okay, value of the following goods or services were supplied directly by the buyer, which is paid by the buyer or at reduced cost. Because of the buyer we are getting it. In that, point number 4 says engineering, development, artwork, design work, and plans and sketches undertaken elsewhere than in India. So any expenses which are incurred out of India, that has to be included. But since we saw that designing charges were paid within India only, then that is not to be included in the transaction value. Are we clear?
Yes, sir. So it means whatever at the time of production of machine, designing charges we paid in India to make the proper design or something like
Correct.
that, sir. Okay, sir. Okay.
Yeah. Yeah.
And sir, one more point, sir, in this
Yes.
regard. Suppose whatever the in the last your example, if we are importing some parts of car and we install in India, okay, and whatever the part we input in India, that will not be part of our total cost, correct?
Yeah, for the purposes of customs duty.
Correct, sir. If suppose any importer wants to input provide the packing material, manufacturing in India, then export these packing material to
The entire point is going to be that whatever you're going to get here, all right, from outside, whatever you're getting it done and coming. So when you're exporting out of India, you have paid, you are basically selling it out.
Yes, sir.
All right,
But
and then you are again buying it in.
Okay, but if I will treat as a work contract, whatever they are producing, I am providing these things.
Yeah, so again, it is very clearly given.
Yes.
The value of following were supplied directly or indirectly by the buyer. We are giving, okay,
yes,
either free of charge or at a reduced cost. So
okay,
all the materials, components, even if you give small tools or something, everything has to be included.
Okay, sir.
All right. Then any royalty fees and all also you'll have to include, because again you are basically buying a royalty. So that is definitely part of your entire component.
Correct.
Right. Then yeah, value of subsequent. I'll just rush into the point number 2, which is for the purposes of subsection 1 of section 14 of Customs Act and the rules. The value of imported goods shall be value of goods for delivery at the time of place of importation and shall include again the cost of transport, loading unloading charges at the place of importation, and the cost of insurance. Very specifically it is given. All right, transportation, the loading unloading, and insurance. to get the CIF, cost insurance rate and all. All right. Then
Yes.
provided that when the cost of transport in clause A is not ascertainable, such cost shall be 20% of the free on board value of goods. The charges referred in clause B, which is loading unloading charges, shall be 1% of free FOB plus cost of transport. Okay. So how do you calculate the loading unloading is you take the FOB value plus cost of transport plus cost of insurance. You do a total on that 1% shall be these charges if it is unknown. Are we following?
Yes, sir.
Yes, sir.
Hi. Yeah. Then where the cost referred in clause C, which is insurance is not ascertainable, then it shall be 1.125% of FOB value. So again, giving you a brief idea on what if loading unloading charges were not given. Then you were supposed to calculate first the FOB, we are aware of it. Then we calculate the freight amount, which is again, which was given 71,000. We didn't know insurance, we didn't know loading charges. So we have to calculate in such a manner. So insurance value first you have to calculate at 1.125%, add the three of them, and then on that 1% will be our loading and loading charges. Okay. We're following? Yes?
Yes,
Guys, any
sir.
doubts at all?
Yes, sir. Yes, sir.
Perfect. All right. So yeah, coming to back to our answer. Yeah. So we calculated the FOB, then we calculate what would be the transaction value. In that note number 1 we covered, which is cost of transport, etc., loading and loading charges, etc., shall be includable in accessible value. It is also clarified that cost of transportation of imported goods includes light rate charges. Again, repeatedly, we have been looking at light rate charges, but that has to be includable. Then, design and engineering work is included in accessible value only when the same is undertaken elsewhere than in India. We just now saw the rule 10.1, and there we saw that if it is included, if it is incurred outside India, only then it is includable. Yes, everyone. Yes.
Yes,
Yes,
sir.
sir.
All right. The third one,
Yes, sir.
buying commission is not includable in accessible value, but if it is not a buying commission, which is commission paid to local agent of exporter, then it shall be included. Very clear, straightforward, all of these. So we have ticked this one. We know 25,000 why it is includable. We know commission paid to local exporter why it is includable. We know freight charges, what we have to bring in, that is definitely includable. And light rate charges, again, since it is at the port of importation, that's why we have to include for transaction value, but we will not include for FOB. Yes.
Yes, sir.
The last one being 1.125% of FOB. If insurance cost is not sustainable, the same shall be added at 1.125% of FOB value. All right.
Yes,
Clear?
sir. Yes.
Clear, sir.
Perfect. Now, apart from that, it is additionally given. Okay, I'll not come to that. We know what was the transaction CIF value. On CIF value, we'll have to calculate the customs duty and IGST. The calculation is very basic. Basic customs duty at 10% of 6,66,148 is 66,000. Then social welfare surcharge. It is given in the question itself. The value is given at 10%. Then that is going off the BCD, which is 6,662. The total will come to 7,39,000. On that value, 12% is added, 88,000. The total custom duty and IGST payable at 1,62,000. Tell me, is any of these claimable by anyone under GST or customs duty or anything at all? Guys?
Yes, sir. IGST can be claimed.
Sure?
Yes, sir.
You need to be more bold. Yes, you're right.
Yes,
So
yes.
what the entire point is that whatever IGST amount you're paying, right, that
Yes.
can be claimed as input. So
Yes.
what the entire purpose of customs duty is again to give a level playing field. It is not to put you in any disadvantage or anything at all. When you're giving a level playing field, that as in when you are incurring those anything within India. So these are the costs which will ideally be put on. Uh, that should be included in also in the value of goods which were brought in within the country, and that's why customs duty is leviable. Again, on that thing, any import as per IGST Act, we have to pay IGST on reverse charge basis. So 12% IGST is leviable, and total customs duty IGST is 1,62,008 rupees. The last one given here was again, it's not important for this question, but yeah, relevance. Just understand that suppose you are bringing the goods from Japan to say Chennai, all right, Chennai port. From Chennai port, you take it to a special economic zone, MEPS. We have here export processing zone. You bring it to MEPS. So any cost of transportation from one custom station to another, that shall not be included for the accessible value. Clear?
Yes, sir.
All right.
Sir, one more point.
Yes.
If we import that material in directly in this special economy zone and add some additional value and then dispatch to customer, then the total import value will be considered for duty purpose, or whatever the
The
dispatch
entire
value.
point again, I'll tell you simply is that you, first of all, when you are telling we'll be doing it, are we the SEB or are we the customer? All
We are
right.
okay.
So you need to understand that the person, to from coming out of the customs gate, whatever cost you have to incur, that you shall have to incur.
Okay, sir.
All right, for getting that goods ready, for making it and all of that, that will be included in the transaction value for sure. Okay, we have question number 2. Sambhav Industries imported a machine for manufacturing steel equipment from George Inc. USA through vessel. Machine we are importing. The cost of the said machine at the factory of George Inc. is US dollar 10,000. George Inc. incurred the cost of US dollar 500 for transporting the said machine from its factory to the port of New York and New Jersey. All right. So first they incurred the machine cost, then they are moving the machinery from New York to New Jersey, for which $500 were incurred, and then it was shipped to Mumbai port. It further paid US dollar 50 as handling charges for loading the machine to the ship. You are required to determine the assessable value of the machine imported by Sambhav Industries under the Customs Act 1962, taking into account the following additional information. Buying commission paid by Sambhav Industries is $50. Freight charges from New York to New Jersey, New Jersey to Mumbai port is $1,000. Exchange rate is 70 rupees. Actual insurance charges are not ascertainable. Light rate charges paid at Mumbai port is 12,000. Loading and unloading and handling charges at Mumbai port is 24,000. We need to calculate it. Quickly tell me what all we can do it. I think we can run through this one. First, FOB, start. Anyone?
$10,000 plus $500.
Okay. Handling charges of $50 paid for loading the machine in the ship. Is it includable?
Yeah, it's not a need to include, sir.
Yes, perfect. So the entire thing is keep up to the point of export. What all are we incurring? $500 is a cost. Definitely yes. Then the transportation from the godown of the manufacturer to the port. What they have incurred was, sorry, manufacturing cost was $10,000. The transportation cost was $500. So definitely $10,500 includable. Then again, they are loading only when they load on the ship, only then it is going to go. So that's why that $50 also is to be includable. So $10,550 for sure is part of FOB. Going ahead, buying commission paid US dollar 50. Will that be includable or not includable?
No, sir.
Buying commission is specifically told ki it is not includable in accessible value under Rule 10.1. We had a look at it. So that's why it will not be part. Freight charges from Port of New York to New Jersey in FOB, will it be includable?
FOB from New Jersey to
In
Mumbai. No, sir.
FOB up to the port of export, it was not incurred. It is only incurred for the journey after that. So that's
Yes.
why it is not part of FOB, but it will be part of the transaction value.
Yes.
Exchange rate is given. Actual insurance charges we have to calculate again at 1.125% because it is not given. Light rate charges again in the nature of transport loading unloading, and that's why that also has to be included at 12,000 rupees. Unloading and handling charges 24,000 rupees is given. So straight cut, clear cut answer, yes, 10,550 is the FOB in USD into 70 rupees is 7,38,500. Then 20% of that will come to say 1,40,000 odd amount, but freight charges is within the limit. Again, not, it is not a limit. If it is given, we don't even need to consider 20% here. 70,000 is the freight charges. Insurance charges is 8,308. Light rate charges at 12,000. Now, why is that? Loading, unloading, unloading and handling charges paid at Mumbai port not includable. That is the only differentiating factor over here. Can you tell me?
Yes, sir. After import, these charges incurred after importation. So
We got the goods over here and we have brought it over here. All right.
yes.
Yeah. Okay. Let me just take you through the answer. That will be easier for us to explain. All right. So insurance charges very well given that included in 1.125% of FOB value. Yes, we saw it in the last sum. Cost of transport of imported goods includes light rate charges. Transportation will include light rate charges and hence it is to be added up. Now, as per rule 10.2, only charges incurred for delivery of goods to the place of importation are included in the transaction value. Very correctly put up. Since we have got it here, up to that point only it is going to be taken as transaction value. Any loading, unloading, handling and all, you know. So basically you might be storing that goods as well. If we imported the goods today, hello, yes, can you hear me, guys?
Yes, sir.
Yes, sir.
Sorry. Huh. So we might be storing that goods at the port as well,
CFS
but
area.
we did not incur all of that expenses, you know, for buying that goods. So we have stored it for 10 days at the customs port and we'll be paying storage charges. That ideally should not be included in the, on that, why should I pay customs duty? If I've kept it for 1 year, it's illogical that I'll be paying you know, that 1 lakh rupees for that, any kind of storage at the port itself. So any loading, unloading, handling charges in association for that imported goods at the are not to be included in the assessable value, and that's why loading, unloading, and handling charges are not added in the transaction value. The CIF or assessable value shall be 8,28,808, and the assessable value, sorry, the customs duty. Do we have to calculate customs duty? Oh, sorry. We have to calculate the assessable value only, which is 8,28,808. Any doubts on these?
No, sir. Very clear.
Everyone?
Yes, sir. Clear, sir.
Okay, perfect. Okay, so these are the notes. Buying commission is definitely, guys, do remember that notes are important. Just knowing that yes, we have done it and going ahead is not going to help. We need to say key why and what. It is, buying commission is between the lines. It is specifically not included in the assessable value of customs valuation. With your permission, I'll proceed to question number 3. Mr. Samuel, a US resident, age 35 years, has come to India on a tourist visa. He carries with him as part of baggage the following. So somebody is coming from US to India and getting certain things. All right. Travel souvenirs, 85,000 value. Other articles, 1,50,000. 80 sticks of cigarettes of rupees 100 each. The total value is 8,000 rupees. 30 cartridges of firearms valuing 500 each, valuing 15,000, and 1 liter wine valuing 15,000. With reference to baggage rules, determine whether Mr. Samuel will be required to pay any customs duty. Guide me through it. Tell me, what are the rules? What do the rules say?
The rule is saying that if foreigner is going to come in India, then the total allowance would be 15,000 rupees per person, and in which the also the rule is saying that if the person is carrying 100 cigarettes, then the cigarettes will be allowed. The 100 cigarette will be considered as a normal duty rate, which is 35 plus all the tax, which is 38%. And in case of cartridge, 50 cartridges are allowed,
Perfect.
irrespective of the value. And the wine or liquor, 2-liter liquor will be allowed with the normal duty. This
Correct.
is the thing.
So up to
And
15,000 rupees.
yeah, and
First of all,
first
uh,
point is completely exempt. These are allowed. No, there is no restriction on that.
what happens when it crosses 15,000 rupees? Say we have 25,000 rupees. At that point of time, what will happen? On the entire 25,000 will be paying, or
No, whatever the total, like 1,50,000 rupees plus 8,000 plus
okay,
15,000 plus
yeah.
15,000 minus 1,500, 15,000, which is allowable. Whatever the total number,
Uh,
we need to pay duty.
perfectly put up, Ravi. Very well done. You basically took off my job on this one. So we'll have a quick look at the baggage rules firstly to understand how it is going to be. All right. Yeah. Just to see what all is allowed and how it is, you have put it very rightly. We'll just read through the provisions. An Indian resident or a foreigner residing in India or tourist of for Indian origin, not being arriving from any country other than Nepal, Bhutan, Myanmar, shall be allowed clearance free of duty articles in his bona fide luggage, which is again clearance free of duty will be getting used personal effects and travel souvenirs. So any effects which have been utilized already, okay, so that shall be clearance, free clearance, no duty is payable on that. And travel souvenirs when they are bringing, that shall be allowed. Then articles other than those mentioned in Annexure 1 up to the value of 50,000 rupees if those are carried on in the accompanied baggage of the passenger. All right. But a tourist of foreign origin, they'll be allowed same use personal effect and travel souvenir, but they'll be allowed articles up to the value of 15,000 rupees only, not 50, 15,000. See, there are two difference. If the person who's coming is of Indian origin, then 50,000 rupees worth of value of effects is allowed. Articles are allowed without any taxes. But when a foreign citizen is coming to India, which is Mr. Samuel is of US origin, then 15,000 worth of articles are only allowed free of any customs duty. Anything above that shall be chargeable. Understandable?
Yes, sir.
Then, uh, where is that particular? Okay, I'll not go deep in rules. Yeah, yeah. So we know that first of all, travel souvenirs definitely not includable. All right. Then other articles carried on in person definitely includable in that 15,000 limit. 15,000 done. Now 80 sticks of cigarettes, 30 cartridge of firearms, and 1 liter of wine. Just let us just have a look. Oh yeah. As per Rule 3 of baggage rules, tourists of foreign origin excluding infant is allowed duty free clearance of travel souvenirs and articles up to 15,000 rupees. It also excludes, remember these are ideally not allowed itself, cigarettes exceeding 600 sticks. So you cannot exceed 100 sticks of cigarettes, and cartridges cannot exceed 50, and alcoholic liquor will not exceed 2 liters. So as long as these are within those limits, you are allowed that up to the value of 15,000 rupees. Now, what will happen if it is exceeding that? Ideally, it is not even, you're not allowed to carry it. All right. Uh, so definitely that shall not only we cannot even we do not need to calculate within that limit of 15,000 and all of that. So again, here we saw six cigarettes we are getting only 80, not below. It is below 100. It is very well allowed. 30 cartridges of firearms is within the 50 limit. That is also allowed. And 1 liter wine, less than 2 liters, it is allowed. So all of these will be taking in the total to ascertain on what amount we have to pay the customs duty. Customs duty rate will be 35% plus surcharge and etc. will come to 38.5%. Are we clear?
Yes, sir.
As per baggage rules, 35% customs duty is chargeable on any duty in excess of what is the amount admissible. So quickly breezing through travel souvenir, nil. We do not need to pay at all. Anything at all, we do not need to pay. Articles carried on in person, 1,50,000 we have taken. Cigarettes, since it is below the limit of 100, that's why the entire cigarette value shall be considered. Just a second. Yeah. Sorry. Yeah, the cigarettes will be 100 cigarettes is allowed. They are importing only 80, and that's why that is well within the limit. Firearms cartridge 15,000. So that is also within the limit of 50, and that is again include we have to add on to the cost 1 liter of wine of 15,000. The total will come to 1,88,000. We need to reduce the given concession which it is already given of 15,000. 1,73,000. On that we calculate 35% customs duty plus 10% of surcharge, coming to totally 38.5%, being 66,006. Shall I proceed to the next last one?
Yes, sir.
Mr. X has imported some items from abroad. Since he was unable to make a self-assessment, he had sought for provisional assessment pending technical testing on 29/4/2021. The technical report was received on 5th of May. Discuss about the time limit available to officer for finalizing the provisional assessment as per law, and guide Mr. X as to when his provisional assessment will be finalized. What is the limit?
2 months, sir.
2 months. From which date?
Date of provisional assessment.
Okay. The 2 month limit is very well correct. The entire crux here is that when any certification or testing etc. is involved, for which an officer is doing provisional assessment, then the time limit is 2 months from the date on which the report is received, because it is subject to that report that he'll be making an assessment. So again, so today he has made a provisional assessment. After 2 months, if he is giving the report is coming, then again it is unfair because the officer was not able to look at the report before giving his views. So 2 months from the date of report is what we have to calculate, and again it is extendable up to 3 months if the commissioner deems fit. All right. So here 5th of May is the date on which the report came. So 5th of June, July. 5th of July is the time limit by which he has to do it. If the commission deems fit, then he can allow it up to September, October, July, August, September, October. 5th of October will be the last date in any chance that he'll have to give up the professional assessment report. Yes?
Yes, sir.
Guys, everyone?
Clear, sir. Clear.
Okay.
Yes,
The
sir.
proper officer can finalize the provisional assessment within 2 months of receipt of a chemical or test report, where provisional assessment is ordered for that reason. The Commissioner of Customs may allow for that period of 3 months if it is not finalized within that 2 months gap. So In this case, provisional assessment will be finalized by 5/7/2021. However, if it is the officer is not able to finalize it by 5/7, Commissioner may allow further period up to 5 October 2021.